I wanted to open it up on the 1st of January, but I'm going to open it up on the 31st of December on Friday, and then let it run for exactly 1 year. And then I'm going to look at, how did it grow? What was the performance in growth? What was the total dividend yield? And then also, as a collective, what was my dividend yield? And also what was the collective growth of all of them? Now, I'm going to invest $500 into each one of these. So I'm going to open up, so there's 10 ETFs and then also the one product from eToro, which is the dividend growth copy portfolio. And I'm going to measure that, against, they're going to compete against each other. Hey everyone, welcome back to my channel. My name is Rian and today I'm going to talk about dividends. Now, why would I want to talk about dividends? Because it will someday slot into my plan where I will retire early. Now, all jokes aside, for those of you who don't know, my wife and I are on the FIRE journey, which is short for financial independence, retire early. But we don't just want to, retire early and then go and sit on a beach and do nothing. There's a lot of purpose for us to try and retire sooner than the average 60 odd age where people retire. But that I will make a separate video on later. So we want to achieve financial independence quite soon in our lives, like I would say in the next 10 years if possible, and I have a plan for that. For now, we are just pursuing our goals, our financial goals, and the big difference in, for just in short, for those who don't know what FIRE is that, we don't want to retire at the age of 60, with a finite amount of money, and hope that we will outlive the amount of money that we have. Like, we want to get to that specific number that will, ultimately, sustain us going forward. So it will be, you will have, money or dividends in this case coming in monthly indefinitely. So there's in layman's terms, or there's not layman's terms, there's a saying that says, the goose, so you have the goose, which is your bundle of money, and that goose, is laying eggs. Now, if you retire with a finite amount of money, you are slowly eating away, at the goose. And at some point you're going to kill the goose because you're going to have to eat the heart, and it's just going to die. And then hopefully you die soon too, because then otherwise you won't have money. So what we want to do is we want to raise a strong, healthy goose so that it can lay eggs for us indefinitely. So in other words, basically putting your money to work. So your money needs to be out there making money for you. Now, when you get to your FIRE number, what the idea is then is to basically switch your entire portfolio into dividend ETFs or into blue chip stocks, dividend high-paying dividend stocks. But for me personally, I wouldn't embark on the journey of choosing individual companies. You would have to, for me personally, I would have to have at least 100 companies in that portfolio to feel like my risk is, spread out quite thin enough. Because if you only have 30 companies and, it's just, things might go wrong with a few of them at the same time. And then, it's just too big of a risk for me. Like, if I'm retired, I don't want to spend a lot of time, worrying about, what's going to happen with these companies or this company or that company. Like, I want to have that peace of mind that, my money is in the market, doing its thing, still growing while I get, my dividend payouts. And I want to, invest into products and ETFs where other people, are doing that. You're basically paying somebody, if you invest into an ETF, you're basically, the expense ratio of that ETF is basically the fee that you pay for somebody to manage that ETF for you. So that's why I would rather put my time and my effort now into finding the correct or the most, or the best ETFs or products that would, ultimately still grow my, my principal, my money, the principal value, which is also the goose, which would take care of the goose, but then also, produce good quality eggs, which is the dividends that would sustain, us indefinitely. Now, a good number, that I usually like to use is a 4%, but I've done some research now on all the different ETF dividend growth ETFs that's out there, and it seems like 4% is a little bit, out of scope. So like you don't get, if you do get, remember there's always a trade-off. So if you have a higher dividend paying ETF, then your growth is not as good. So you get like some of these ETFs, you get like a international super high dividend, but that ETF has been losing value for the past 10 years. So what you don't want is you don't want to be, slowly killing your goose. It's laying eggs, but it's not going to keep on laying quality eggs, because at some point, your money will lose all of its value. So you want to have your principal growing, as time goes by. And, in effect, so you just don't want to lose money. And also I would say you don't want to just, be average. You want to grow, even if it's ever so slightly, whilst you get out, that dividend payments. Now, I've looked at it and it seems like you can hit a sweet spot at around 3%. So now part of this experiment would be, to see how individual ETFs perform. Now, I want to see how they perform individually, and I also want to see how they perform collectively, because in the event where we do reach that number, I want to have a plan. I want to know what should I do. Like, I want to know what I can expect as well. So that's why I came up with this challenge, was to see how 10 different ETFs perform in 1 year's time. So I'm going to open up these 10 different ETF trades on eToro. eToro's platform. Now, there are a few that I am sad that eToro doesn't have, and that is something like the IGRO, which is the International Dividend Growth ETF. But so I'm going to focus on the ones that are available on eToro, because that's the only place where I, as a South African, can invest into international markets. Yes, that's pretty sad, I know. So I wish that I could invest on apps like Robinhood or Webull or Public or any one of those, but unfortunately my passport doesn't have that power, and we are not allowed on those platforms, unfortunately. But eToro does give me access to the London Stock Exchange, New York Stock Exchange, and all those stock exchanges, and that that's what makes eToro worthwhile for me. So I'm going to be looking at 10 different ETFs, dividend growth or high dividend paying ETFs. So, on eToro. But remember, so not all of them are dividend growth ETFs. Some of them are just high dividends. So they don't grow as much, but then some of them are more growth orientated. So as a collective, I'm also going to measure the results as a collective and not just individually. This challenge will run for 1 year. So I will open up the trades. If you look at the calendar, I wanted to open it up on the 1st of January, but I'm going to open it up on the 31st of December, on Friday, and then let it run for exactly 1 year. And then I'm going to look at, how did it grow? What was the performance in growth? What was the total dividend yield? And then also, as a collective, what was my dividend yield? And also what was the collective growth of all of them? Now, I'm going to invest $500 into each one of these. So I'm going to open up, so there's 10 ETFs, and then also the one product from eToro, which is the dividend growth copy portfolio. And I'm going to measure that, against, they're going to compete against each other. So let's look at my choice of dividend ETFs that are available on eToro for this challenge that will span exactly 1 year. All right, let's look at this. All right, so the very first one is the Vanguard Dividend Appreciation ETF. Now, you will see that I have a mix of all the different companies. Now, Vanguard is by far my favorite company that, where, I hold a lot of Vanguard ETFs in overall. You can see on my main portfolio, I've got, VOOC, a lot of growth ETFs. I've got, technology ones. I've already got this dividend appreciation one here. I've got the value one. So I really enjoy, or I love Vanguard ETFs. They just, they are just very, very good products in my, my opinion. But for the purpose of this exercise, I am going to invest $500 into the Vanguard Dividend Appreciation ETF. And you can see here that, it's obviously based in, the United States. Now, just another, like I've mentioned a little bit before, I would have loved to have exposure, internationally, in America, Asia, and then also emerging markets. Right. So on eToro, there's only the Asian one, and then most of the other ones are based in the US. But they obviously invest into different companies, and they obviously, differ in the way that they select them, and to get that sweet spot between growth and dividends. So overall, if you invest into so many different ones, your exposure is quite broad. And that's what I want to experiment with. I want to see, just what exactly happens when you invest into so many different high dividend paying growth ETFs. All right, so the first one, like I've mentioned before, is the VIG, Vanguard Dividend Appreciation ETF. Now, the VIG has a current yield of 1.6%. Now, you can see that I have grouped them here. I've sorted them from lowest yield until highest yield, and then also the wildcard, which is eToro's own product that I'm very excited to test. And you can see that obviously, this has got a lower yield, so I expect the growth on VIG to be better than I would, expect the growth of SPYD or even the Asian one over here. The next one is Charles Schwab US Dividend Equity ETF. Now, this one, Charles Schwab, has a yield of 3% exactly, a current yield of 3%. And then also we have DGRO, which is the iShares Core Dividend Growth ETF. So this is the actual growth ETF from iShares. Now, you would expect this one to have a lower yield. Yes, you can see here it's 2.1. It's a little bit lower than, because it's probably got a lot of growth stocks in there. And now you can go and read on any of these ETFs. You can go to websites like ETF.com and exactly see the breakdown of any one of these ETFs exactly. And I've done a lot of research on these, and these are the ones that I've found and that I want to, invest into. So I'm not going to talk too much about each of these. Please do your own research. But these are my picks, and I just want to, for the purpose of this video, cover their yields, or the ones that I chose, and also the yields that they produce. All right, the next one is also from iShares, and that is DVY, and it's the Select Dividend. Now, this is more focused on the Dow Jones, the Dow Jones Select Dividend Index Fund, and you can see that this one produces a dividend yield of 3.1%. And we have the next one is the high dividend yield. Now, this one would obviously return a higher dividend yield, but my hope is that dividend or ETFs that produce higher yields but might not grow as much would be offset by ones that do grow more but produces less dividends. All right. The next one would be the Asian one, which is the IAPD. Now, this is one, it's very difficult to find information on this. And, it's listed on the London Stock Exchange, the LSE. And you can see that this is the highest one. This is one with a dividend yield of 5.63% currently. So I'm very excited to test this one out. Our next one is the SPHD, which is the Invesco S&P 500 high dividend, low volatility ETF. So they selected stocks from the S&P 500 that's got high dividend payouts with low volatility. And let's see the SPHD. Well, it's got a good return of 3.52% dividend yield. Then our next one is Noble ProShares. So it's from ProShares, the S&P Dividend Aristocrats ETF. Then we have SPYD. Now this is the SPDR, the company SPDR's portfolio, the S&P. So they are choosing high dividend paying stocks from the S&P 500. And you can see that SPYD has a very high yield of 3.75. And then we have the UDVD stocks that has been, paying consistent or like increasing dividends over the past 20 years. All right, so this is the one, very difficult to find information on this one. So this is my ninth or my 10th pick, and this is UDVD, 2.19%. And then the last one that I'm very excited about is eToro's own dividend growth copy portfolio. Now you can see here that, they say that this smart portfolio allocates in stocks based on the eToro's asset universe, and it is based on high quality dividend paying companies that have paid increasing dividends for the last 20 consecutive years. And also the minimum for this copy portfolio is $500. Now, if we look at the breakdown here, you can see that they have a projected yield of 3.75, but the indicative yield is 3.15. So I have it here as 3.15. And then also they have all the companies, the top 15 holdings, and also with their weights. So this is a completely custom product managed by eToro. So it's basically like an actively managed ETF. So this is, I'm really excited to see how this performs in over 1 year's time. And let's look at the companies that they invest into. So you can go to portfolio, and then you can look at all the different. So if I click on view all, and let's go to invested, there you go, 5%. So they've got, you can see companies like Unilever, Johnson & Johnson, Pep. You can see McDonald's here. Sorry, not Pep, it's like Pepsi, but Pep, the ticker. McDonald's, you've got AT&T, you've got IBM. So you can see it's a lot of these value companies that, has been around since forever, like Coca-Cola. It's big names, big companies that's, just been paying, dividends consistently. Walmart, over the past 20 years. So this is, I'm really excited to see. They've got 40 companies in this portfolio. So you can see we've got a good mix here. We've got Vanguard, we've got Charles Schwab, we've got iShares, 3 from iShares. We've got, 4 from iShares. And then we have Invesco, we've got Noble, we've got SPDR, 2 from SPDR. And I'm pretty sure we had Invesco. Yeah, no, that's it. And then we have eToro's own product. So I will make a follow-up video where I show you guys where I opened up all of these ETFs and also the dividend income. So my challenge now is actually to free up $5,500 for this experiment. So what I'm going to do is I'm actually going to close a lot of these losing positions of mine, just for tax harvesting. So I still have a few days left to do that. So I'm going to close some of these losers out. I will keep on holding on to a lot of them. Like I won't close out my, Disney, and I won't close out, some of my, like Tattooed Chef, some of these companies that, I'll just buy into some of these even more. But like with some of these companies, I'll cut my losses, and I'm going to free up $5,000, to invest into or to do this experiment. And then, in 1 year's time, or actually next week, or I'll make a video where I'll show you guys. I'm gonna just show you guys where I've opened up all of these on the 31st, and then exactly in 1 year's time we will revisit this, and we will do all of the math, and we will see exactly how did this combination perform, and also what growth did we get, and what percentage of yield, of dividend yields did we get exactly in 1 year's time. I'm just very curious now to see. Let's quickly look at this. Let's calculate the average yield that we can expect from this combination. So I'm going to write here average yield. So if we take this, and then we'll see how close we got to that. So I'm going to just get the calculator here. So let's see. So it's 1.6 plus 1.9 plus 2.1 plus 2.19 plus 3 plus 3.1. Sorry, 3.1 plus 3.52 plus 3.56 plus 3.75 plus 5.63, then plus 3.15 with the eToro one. So I'm going to take this and divide it by 11. And then, so I'm looking at an average of 3.04%, 3.04% yield. So this is what we're going to be using. We're going to look at this video next year and we're going to see how close did we get to that. And then also what growth can we expect from our principal. So if I'm going to invest $5,500, I'm going to see what that $5,500 is worth exactly in 1 year's time. So that's what I'm very excited about, to see, what happened to our goose, what happened to our principal, if we parked 5.5K, into these ETFs and see, what is it worth, and then exactly how much did we, get back via dividends. Did we get 3%, and then also how did the individual ETFs perform. But anyways, thanks so much for watching, guys. If you are new to eToro, you can find my sign up link in the description below. And also, if you like this video, please give it a like and please consider subscribing to the channel. It really motivates me to make these videos for you guys. And yeah, let me know if there's something else that you guys would like to see me make videos on, or some topics that you would like to see me cover. But yeah, thanks a lot for watching. I really appreciate it, and have a blessed Christmas time and a fantastic new year. All right, guys, talk next time. Cheers. Bye-bye.